The US inflation data was released yesterday, and it seems like the economy is finally starting to catch a break. After months of high inflation rates, January's consumer price index doesn't suggest inflation in the US is reheating in a big way. Let's discuss this. The US annual inflation rate decreased from 6.5% in December to 6.4% in January 2023. Even so, if you see this chart, it is the lowest reading since October of 2021. However, on a monthly basis, it climbed 0.5% owing to a rise in gas and food prices. Now, to get a sense of underlying price pressures, let's look at the core CPI. Now, the core CPI is the best predictor of future inflation, which excludes volatile food and energy prices. Now, core index in US climbed 0.4% on a monthly basis and 5.6% from a year ago. Price increases have moderated in the United States in the month of January, but there were some worrying details. Now, this is due to persistently high inflationary pressures in the services sector and housing. Food prices are also climbing swiftly. Now, another important point to note is that inflation has decreased from its peak of 9.1% in June last year, but it is still more than 3 times the target set by the Fed, which is 2%. It is no secret that India's exports have been slowing. Exports in December dipped by about 12% from a year ago to $34.5 billion. Now, this is on the back of a recessionary outlook that has dented consumer demand across several emerging and advanced economies. Now, in April, the government is expected to declare its foreign trade policy, which has been delayed several times and which will establish its future goal for exports. The government in September deferred FTP for 2022 to 2027, which was slated to be announced on September 38 on the back of global macroeconomic challenges. To give you a lowdown on foreign trade policy, it's basically a country's official rule book for playing the game of international trade. Now, think of it like a giant playbook for how to make trade deals and get those exports flowing. Now, it's got all the rules, tariffs, incentives that a country needs to play in the global marketplace. And it is updated every few years to keep up with the latest trends and challenges. Now, that's because a stagnant policy won't be of any real help to the economy if it can't adapt to these dynamics. The long-term vision of this FTP is expected to recommend measures to achieve $1 trillion worth of exports by 2030. So what does these news mean for you? Well, the last couple of months' inflation data does show signs of turning a corner. US inflation still remains historically high and above Fed's target of 2%. This will have an indirect neutral impact on you. We believe an FTP is expected to be the key to defining the strategy for India to capture a significant share in global trade. Especially with our exports slowing, we need a dynamic foreign trade policy that lays down the vision covering certain areas that will facilitate achieving a long-term target. This will have an indirect neutral impact on you. While I say this is me, Merlin Susanna, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.